Can you believe it? It is already December the 1st. It's the holiday period. Hello, Alex Peters. How are you?
I'm doing good, James. How are you? How was your holiday?
It was good. Thanksgiving is an incredible time of year. I absolutely love it. Even though obviously I'm British, it is one of my favorite times of the year. And it's obviously a great time to take a day off work, enjoy the family. But most importantly, what is going on with interest rates at the moment? Give us an update.
So last time we spoke, I talked about okay, here it is. I think rates are going to be moving up from here on out because the Fed started tapering their spending. Basically, that means how right now, ever since COVID, they've been spending tens, hundreds of billions of dollars a month buying bonds to keep rates low. They're tapering that spending, meaning they're spending less and less and less. And so that's kind of news that, hey guys, rates are going to start going up. And that was continuing. Rates did start going up, and they are higher than last month by maybe like an eighth to a quarter. Still in the low threes on conventional, high twos, low threes on FHA, VA. But the Omicron, if I'm saying that wrong, I apologize, virus, variant, I should say. Anytime there is bad news with COVID, it helps interest rates stay low. So it's doom and gloom for the world. And I by no means hope that we continue down getting bad news with COVID. There's always a silver lining though. And one of those silver linings is that interest rates have dropped off a little bit from their highs about 2 weeks ago, maybe a week ago.
Basically, all the money that you've got invested in the stock market has just dropped dramatically. But the good news is go out and buy a house and get the low interest rate.
Yep. So I was having this conversation with another loan officer friend. One thing I do want to mention while we're here, breaking news, really important and exciting, is that they've increased the loan limits. So
that is massive.
It is. And by the way, for anyone listening, every year the FHFA meet and they discuss about the loan limits. There's a national loan limit for conventional loans. It was 548,000. They've increased it to 647,000, which is the biggest one-year increase I've ever seen. And what that tells you is house prices have risen quite a bit, and there's confidence that they're going to stay there or potentially rise, because they wouldn't have increased it by 100,000 if they think we're heading into a crash or if we're heading into a slowdown. Talking to some of my loan officer buddies, because they did that, and with opinions about COVID, they think that we could see rates stay in this low 3, high 2 range for at least another 3 or 4 months. It really kind of depends on what happens with the virus, how we freak out, and how we handle it if we freak out. Because like I said, the more bad news, the better it is for rates. But if things start to improve, that's where the Fed's already saying we're going to taper spending. We need to recover things. They're talking about inflation, which is bad for rates. So it's a battle right now. It's kind of just doing this, just moving back and forth like a tug of war. If you watch Squid Game, it's like a tug of war. So let's see who wins it out. I have a feeling long term, we're still going to see rates go up, but in the short term, we might have a little bit more of a grace. And for those who are thinking we're heading into a slowdown, house prices are going to crash, I just don't see it anytime soon because the demand is still high and the inventory is even lower.
Makes a difference. The loan rates make a difference on the market as well, because obviously some people can't, they won't qualify for certain loans.
Right.
They only have a certain amount down, etc. By that rate going up, what that means is there's going to be more people, especially in a certain price range. Whereas before, someone maybe couldn't have afforded because they didn't have the right down payment or anything. They couldn't have got a good interest rate at a certain price. Now there's going to be a higher price. There's going to be more people in that area. And, even at the higher price point, whereas, when people were now, you can get a second loan and there's all these different options and not going jumbo. Now that first loan is, it can be even bigger. So what's it for San Diego now?
Yeah, thank you. That's exactly what I was getting to next. So the national conforming limit is 647 and some change, which means for regular areas, non-high cost areas, San Diego's a high cost area, it's 647K. Anything above that's considered a jumbo loan, which are harder to qualify for, typically have higher rates, higher down payment requirements, etc. San Diego is going to 874,000. So we're like 125K off of $1 million. So you can buy I think it's a $950,000 home. Let me do the math here.
Yeah, I was going to say, like before, if I wanted to buy a
920.
if I wanted to buy a home in the nines, I was probably going to have to put down 20% a lot of the time, wasn't I? Whereas now, how much?
15-20% at least. Now it's 920K.
Yeah.
5% down, and you can buy a house. So 5% on 920K is 46,000, which before you would have needed closer to 185,000. So
that makes a massive difference.
Quite a big difference.
Yeah.
So anyone out there listening that may have been shopping in the 850 to 920 range, maybe 800 and 920 range, and maybe you're having a hard time getting a loan before, definitely reach out and let's reevaluate those options.
And is that available now, or is it like January the 1st?
Right now.
Brilliant. Well, that's great.
So FHFA announces it as January 1st. Then they allow all the lenders to start doing it now, as long as the lender delivers the loan after January 1st. So it has nothing to do with the client. The lender handles it. Short of it is we can do it now.
Well, as you say, we believe at some point house prices will have to change and interest rates will have to change. But everything is showing us right now that in the next couple of months, things aren't going to be changing. It looks like with everything that's happening, house prices are going to continue, being strong, and interest rates at the moment are still fantastic.
I think we're in a really good spot right now. I think after the holiday season, we'll obviously get some more inventory on the market. But if you're a seller out there listening, and I know if you've been listening for how long we've been doing this, over a year now, there is going to be a certain point where I think house prices will have an inflection. We'll start to see them maybe not drop, but they'll kind of just level off. I think that time's approaching, and for sure, like the next 6 to 12 months, no more than 18 months. It's my opinion, and I've been wrong a lot on this freaking podcast.
Yeah, the truth is we've been wrong. Experts have been wrong, and so it's one of those, you just got to do what's right for you. We'll do our best to give you the opinion on what's happening now and what we think might happen in the future, but you're rolling the dice with any investment, whether it's a house, on the stock market, cryptocurrency. You can read as many things as you want saying it's going to go here, it's going to go there. The truth is you're rolling the dice. But what we can tell you is right now is things are looking strong for the market. The fact that they are doing these things means that house prices are most likely not going to crash tomorrow. They are most likely going to stay at least steady, if not, during this winter period, it looks like, with interest rates staying low. As you mentioned quickly before, there's not going to be much on the market historically this time of year anyway. Most people move in the spring. So it's one of those that if you're waiting till next year for more inventory, just remember there's also 1 million buyers waiting to buy in the spring as well. So I always say to people, there's less inventory in the winter, there's less buyers in the winter. There's more inventory in the spring, but there's more buyers in the spring. So they generally even each other out, in my opinion.
That's what I've noticed as well. Yeah.
Anything else going on that you want to just mention? Any other random new things that are out on there?
I mean, the one thing that I'm reminding everyone, all my realtor partners, all my clients right now, is that we have these specialty loan programs. You and I actually just did a pre-approval for a client where the client didn't necessarily have 2 years of good tax return income. So we took 12 months of her bank statements and we got her qualified on 10% down, almost up to $1 million. And so programs like that, where you may be self-employed, you don't have a lot of income that you claim, but you have a lot of deposits, or maybe you got a lot of money in the bank, but you don't have a lot of income. We've got all the different programs under the sun. It's worth reaching out. I love to tell clients yes when they've been told no 100 times by other people, because we have the ability to do that.
100%. You've saved the day on more than one occasion for me where someone has literally said no. I remember a new build that we did, must have been about 18 months ago or something now. Yeah. And I remember they were told, they went to one of these companies, new builds, and they said, you have to use our lender to get this credit back. And in the end, the lender said, no, we can't process the loan, even though they'd already pre-approved him and done all of this. And you came in and saved a day and actually got the loan done, and we still got the credit, etc. as well anyway. So
we got the credit, we closed on time.
Yeah.
If we didn't close on time, we would have lost the credit. And I think we only had like a 20, you gave it to me, we had like 20 days left. So the point is we can move quick and we have flexibility and we have all the different options.
Exactly. Well, thanks for your time, Alex. Thanks for all your help, always helping all our clients. And yeah, next time I see you will be well, I'll see you beforehand, but next time I see you on here will be 2022, new year.
2022, let's finish the year strong.
Let's hope it's better than 2020 and 2021.
I'm committed to it. Let's make it happen.
Cool. Have a good one.
Cheers. Thanks, James. Bye.